Motus is an international importer and distributor of passenger, light commercial vehicles and aftermarket parts, with South Africa its largest market, contributing 56% to revenue, with the remainder being contributed by the UK, Australia and Asia. The company has experienced a tough 2025 financial year with a 1% reduced revenue, mainly as a result of lower contributions from new vehicle sales and a 6% drop, primarily in the group's international operations. Group CEO Orkut Janse van Rensburg presented the company's financial results for the year ended 30th June 2025.
Overall revenue, it's pretty much in line with last year, 113 billion. Operating profit also in line with the prior year, but once again, like I said, a much better performance in H2 than H1. Operating profit up 4%, and then I think the big kicker for us is that our headline earnings per share is up 5%, and that has certainly been a good performance for us. On the cash generation, you can see there, the cash generation from operations, cash flow is 5.7 billion. So you can see whatever we created in the operating profit, that actually translates into cash.
The JSE listed company says amid a tough 2025, improved second half performance bolstered the group's overall performance. Motus managed to up its full year headline earnings and dividends, with the group declaring a total dividend of 5.50 cents per share, up 6% from the prior year, also managing to reduce its debt.
Like I said, 1.5 times net debt to EBITDA. But the biggest kicker here, and that's why our headline earnings per share is up, is we had a massive reduction of finance costs, reduced by 13% year on year. Now, to get double-digit reduction of finance costs, not easily to come by, and we're quite pleased with that result. Still getting a lot of our profits from our international operations. More than 35% of our profits still come from international. Our diversification strategy has certainly helped. We're getting more than 55% also from non-vehicle sales. So that's our other services and products that we sell.
Motus says looking forward, the company expects an improved financial performance with growth in operating profit following the relaunch of Tata into the South African market. The company says it's also seeing green shoots from Chinese brands.
This is tough, because remember, there was a lot of new entrants coming in. You didn't have the same brand representation with all the new market entrants, but yet we still maintain our selling 1 out of 5 passenger vehicles. How did we achieve it? Was pretty much through increasing our Chinese brand representation. So there you can see what does it look like on a global scale in SA, but also in the UK and Australia, where Australia is probably the leader because they started much earlier. 29% of those sites actually do have a Chinese brand attached to them. And why we keep on referring to them is that is the new kids on the block. You have to accept that is where a lot of the vehicles are coming from, and they're quite aggressive even in the South African market.
The company says the outlook remains subject to consumer demand and the challenging macroeconomic and geopolitical environments, which continue to reflect constrained conditions in the automotive sector. SABC News in Johannesburg.